Uber CEO Dara Khosrowshahi. Dara, thanks for being with us. I got you?
Happy to do it. Thank you.
So we're seeing improving revenue growth, but you guys are still burning through billions a year. When does Uber break even? Are you willing to give us a timetable today?
Yeah, I think if you look at our numbers, it was a very significant beat on the top line in terms of revenue growth accelerating and the bottom line. We increased our 2019, the midpoint of our guidance in as far as EBITDA goes by $250 million. And I'll tell you, Deirdre, while we haven't finalized our planning, and it's going to take a lot of hard work from a lot of folks, we are actually targeting 2021 for adjusted EBITDA profitability full year. So we know that there's an expectation of profitability, and we expect to deliver for 2021.
So you'll be EBITDA profitable in 2021, or that's when you start to break even?
We are targeting full year 2021 EBITDA profitability as a team.
Okay, Dara, I'll ask you the same question I posed to Lyft. How do you get there, and how can you give this kind of timetable when there are still so many uncertainties out there, particularly regulation as it pertains to your drivers? You've got that so-called gig economy bill here in California that could raise costs significantly.
So there are certainly many uncertainties out there, but what gives me comfort, for example, is you look at our ride segment adjusted EBITDA of $631 million. That's up 52% year on year. Our rides business already pays for the entire corporate overhead of the company today. And I think we're just getting started in terms of the work that we can do to increase take rates, EBITDA margins. EBITDA margins for that segment were 22%, up significantly, and we think we can continue it. When we look at the gig economy in California, California accounts for about 9% of our bookings on a global basis, and it's de minimis from a profitability standpoint. So there's an initiative out there. We think we can get to a better answer, but from an overall financial standpoint, we're a global company. We're incredibly diversified, and we think that we can get to 2021 profitability with the tailwinds, with the growth tailwinds that we see in the business, and despite some of the regulatory headwinds that we do meet once in a while.
Now, Dara, I think that investors have been looking for this so-called path to profitability for a long time, though I see your stock in the after hours. Maybe they're still digesting it, still down some 6%. How much of this is this rationalization that you and your rival, smaller rival Lyft, have been talking about? Do you get to profitability? Are prices going to go up for the consumer, for the rider?
I think that there's certainly some element of pricing to the rider as well, but I do think that all of the technology companies that have been kind of moving in the growth at all cost standpoint can get more efficient, in terms of allocation of capital, how they think about their cost base. And I think that this move towards more discipline around capital is a move that is healthy for the industry, and it's definitely healthy for Uber because of the size, scale, and the global coverage that we've already established.